So Washington is bracing for impact, and if there's one single reason that made Trump U-turn the tariffs, it was the bond market. The totality of the retaliations and the fear from global investors, it sent the US market spiraling down. Everyone was afraid of the dark road the US was going down. Now, if protectionism is the end goal, buying US debt isn't a good bet. Domestic demand would head down, production costs would rise. Eventually, that means exports won't be competitive as well. So global revenues will also be heading down. That's why we had an enormous bond rout. Yields on the 10-year, which is the benchmark rate for everything, flew up to nearly 4.5% and even surpassed that for hours. This is the worst meltdown in 20 years since 9/11 and long-term capital management collapse. So now borrowing costs around the US has officially gone up. And whether you're taking a mortgage or corporate loan, you'll be paying more. Trump understands this, and it's why he paused the tariffs for 90 days. Investors were in full revolt. If the US didn't want to trade with the world, the demand for dollars would plummet. But the big question still remains, who did the bond dump last week? There's a lot of speculation, and understanding the identity is very important. And the White House, especially Scott Bessent, is in panic mode.
Been big swings this week in the Treasury bond yields. There's a theory that it might be because of China dumping these as leverage, driving up costs for U.S. loans like mortgages. Does the White House have evidence that this is in fact a result of Chinese dumping? And if so, is there a message on that?
Not to my knowledge, but I would check in with the Treasury Department on that. I can tell you, I know our Secretary of Treasury, Scott Bessent, is keeping a very close eye on the bond market. He spoke about it at the White House this week, and I know he's keeping his eyes on it day to day.
Over the years, foreign owners of US bonds, they've been buying one particular type of debt above any others. They own nearly 9 trillion in US debt, and 80% of which are long-term treasuries. And these are your 10 to 30-year bonds that affect the real borrowing costs in the United States. Once again, what the Fed does with short-term rates on the front end of the curve doesn't really matter. Even if the Fed cuts the Fed funds rate to 2% tomorrow, but long-term rates spike to 5%, the economy will still melt down. What truly matters are the holders of these long-term bonds. If foreign countries decide to dump, especially during the tariff war, this period, it could force the US government to step in and save the bond market. Bessent will be forced to call Jerome Powell and the Fed and beg him to buy long-term bonds in the open market to stabilize yields. And make no mistake, this has happened before, most recently in 2020. The Fed's mandate isn't just to manage inflation and unemployment, sure that's what they say, but the true mandate is to ensure the entire financial system doesn't implode, which means to stabilize interest rates in the real economy. During the 2020 pandemic, we saw a big unwinding of $500 billion in hedge fund trades. This caused the 90-day corporate loan rate to spike to the moon. It went almost 300 basis points higher, more than 3% over the 3-month Treasury bond. In other words, real companies in the US had to pay an insane amount to borrow short-term cash, and that could grind business activity, including paying people's salaries, to a complete halt. As a result, the Federal Reserve capitulated. They went into the market and they bought $1.6 trillion worth of Treasury bonds to flood the economy with money. So we could see a repeat of the exact same situation happening in the coming weeks, especially if Trump decides to U-turn on his tariff pause. And no, the Federal Reserve can't afford to print money this time. It's different. It will send the dollar even lower when trust in the reserve currency is already circling the toilet. So who dumped? Well, there's speculation it was Japan that did the dumping, which is a big eye-opener.
But it is the White House who capitulated based on everything I hear and all my sources. And the reason why is because of the bond market and what happened last night. You know, Bessent knows this better than anybody. When you have yields on the 10-year rising to 5%, stuff starts shutting down when you have the lending markets screwed up. By the way, who was dumping the bonds? Somebody asked them if it was China, right? Mm-hmm. It wasn't. It was Japan. While he was negotiating with Japan, according to my sources, who are running major money management firms that are involved in the bond market, without giving up names, Japan was dumping bonds because they believed this was not a great place to do business.
So was it Japan? That assumption might be true, and we'll only know in a month or two. But the selling isn't just restricted to the Japanese. We need to look at where the money is going to. Firstly, the euro is surging against the US dollar. You see the big spike in April, that's money leaving the dollar and heading into euros. And obviously, when you hold euros, you have to invest it somewhere or lose buying power to inflation. And if we continue tracing the flow of money, we get exactly where the massive selling is coming from and going to. The US 10-year yield has flown up by 2% versus the German 10-year yield, which means the value of US treasuries is collapsing versus the value of German bonds, which is going up. Remember what's happening with Germany? They are now moving towards a war economy, which means they'll be issuing a ton of bonds, easily a trillion or more than that over the next decade. So there's another competitor to the US Treasury market. For better or for worse, the Germans are coming in with another alternative for investors that need to buy bonds. But the recent action tells us someone out there is dumping 10-year US bonds and piling them into German debt. And guess what? The selling might very well be coming from the Chinese. China today owns around 750 billion worth of US bonds, but if you add in Hong Kong plus their stash of other agency debt, it's closer to a whole $1 trillion. However, Beijing also holds at least 300 billion worth of treasuries in Belgium through custodian accounts. The Chinese government could be selling their EU holdings of dollar bonds. They might be dumping their holdings to ramp up the pain for Besant's treasury market. Even if it's not them, there's a reason why the US is afraid. China collectively still has over $1.5 trillion in US securities, in US assets, that they can just unload to spook out the markets. That's the financial nuclear option should the trade war escalate even further. This would destabilize the market at a very critical time. It could force Trump to U-turn on this senseless tariff war or risk even more countries dumping their holdings as well. But let's talk about the art of the deal now, because the White House just did another U-turn on the tariff war. And this is fresh off the boat, guys. The US government realizes that the trade war is unsustainable, and it has only been less than 5 days.
Reciprocal makes tariffs really fair.
There'd be no exemptions, right? It would be all auto imports?
Any exemptions, no, because you don't need to. With reciprocal, you don't need to.
Trump has given a big exemption on the reciprocal tariffs to key Chinese imports, and this includes smartphones, computers, and other electronics. So the 125% punishment has collapsed down to zero for these key products. Once again, this is the further admission that the US consumer is in deep trouble. Plus, US manufacturing simply doesn't have the capability to conjure products from thin air. The ecosystem isn't fleshed out yet. And here's the kicker, it's US companies that get a reprieve from this crazy trade war. The exclusions apply to smartphones, laptop computers, hard drives, processors, and memory chips, all the components needed for phones, computers, and even semiconductors. And more importantly, this move saves Apple because now they can make phones in China and sell them back to the US tariff-free. So high-tech manufacturing isn't being reshored to the US, the cost is simply too high. So if you own stock in Apple, you can expect a nice rally, a sharp rally on Monday. Tim Cook must have hounded Trump day and night for this exemption, because if he didn't, it will cost around $3,000 or even more to buy an iPhone in the United States. The biggest winner today is the US consumer, because at least they won't face a sticker shock when they head out to get a new phone. There's no way around the huge dependency on Chinese manufacturing. More than 70% of smartphones entering the US are from Chinese suppliers, and as we said before, designed in California and made in Shenzhen. This is the business model of today and the business model of tomorrow. Consumers in the US simply can't take the beating anymore. The sentiment numbers are out and we are witnessing a capitulation from the White House based on this.
Why is American consumer confidence so low?
Look, I think there's a great optimism in this economy, great optimism for the American people, a lot of reason for people to feel optimistic. The president is, as I just said, trying to renegotiate the global trade agenda that has ripped off the American people for far too long. As he said, this is going to be a period of transition. He wants consumers to trust in him, and they should trust in him. Look at what he did in his first term.
The amount of question dodging here is epic, but it's because of the collapsing consumer that this move was even made. There's simply no question about it. Just look at the data here. US consumer sentiment has fallen to the second lowest ever on the record. you need to travel back to the 70s to find a period worse in time. Meanwhile, the 12-month inflation expectations have reached an insane 6.7%. If Trump doesn't bring this figure down, we will see the mother of spending cutbacks happen. And that would most definitely confirm a US recession by June or July this year. People are petrified to spend, especially when it comes to imports from China, which is a major part of consumers' budgets. This also means we can kind of expect more exemptions for Chinese goods where there's simply no other alternative available in the market. And once again, this is a miscalculation by Trump's economic team. They should have seen this coming. Not only did it cause unnecessary market destruction, now countries realize that Trump has caved twice in under a week. These are the top 10 US imports from China last year. Game consoles, PC monitors, smartphones, lithium batteries, and even plastic products. All these are either under the exemption list or will be likely exempted sooner or later. Goods from China accounts for over 70% of their total imports in most cases. And if the US consumer still continues to collapse, we can expect even more exemptions on headphones, medicine, and all the computer parts. Makes you even wonder, was there even a point to all the tariffs? Because once you grant the exemptions, it's going to be very hard to walk those back without crashing the stock market, without crashing the bond market and the dollar. The entire financial system is now connected to the fate of the tariffs. If you have stocks in China, you can also expect a very nice rally on Monday. The spike up will be beautiful. And whether that lasts, we don't know, right? Trump might just flip again and slap the tariffs to prove another point. It's still going to be insanity. While we talk a lot about the financial markets, the final say once again belongs to the US consumer. If they decide not to buy, that action will cause investors to dump even more US assets. That, ironically, as we have seen, will drive yields higher and make the situation even more untenable. In a Michigan consumer survey, we can see a massive jump in people's anxiety when it comes to inflation. Even during the 2020 pandemic, long-term inflation expectations were anchored at only 3%. People expected the crisis to end in the next 5 years, and it did. But in April, the number jumped to 4.4% for the next 5 to 10 years. In other words, people realized that Trump might be very serious and he could go all the way for much longer. The crazy tariffs on China and the blanket punishments on the world might be here to stay. So higher prices are now structural. It's not a bug, it's the feature of the US economy. The tariff war has really screwed with people's minds. There's a very good chance in the next month or two there'll be more backtracking to try and reverse a recession. The economy is on the brink, and together with the bond market on the verge of collapse, it might just force Trump's hand. America itself will force the United States to abandon the tariff war. But let me know what you think. Is China really planning a great treasury dump? And will Trump grant even more exemptions to Chinese goods? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.